Stokes, trading coach and co-founder of Tier1Trading.com, and thank you once again for joining me for another video. I titled these videos The Trading Edge, and it's a daily video that my business partner Jason Greystone and myself do on the Tier 1 Trading platform to give our traders an idea of what opportunities are on our radar and also give them a sense of how to practically apply the information that they're learning in the courses to the live markets. When I get the time, I try to do a YouTube version of this video as well. That way you guys can benefit also. In today's video, we're going to talk about a few things. We're going to talk about simple pattern formations, classic pattern formations, and advanced pattern formations. And I'm also going to show you an opportunity that is on my radar for the week ahead. We're also going to give you guys an update on my trading progress, right? February just ended. I try to keep you guys updated with the stats. So I'll give you guys a look at how my trading has been, not only in the month of February, but throughout the entire year as well. Now, before we dig into the charts, do me a big favor. If you guys are brand new, hit that subscribe button. Make sure you hit that little notification bell as well. That way you can join me live for the premiere. It's awesome. We have a chat to our right. People are talking right now, and it just creates a really cool environment to show these videos. And also make sure you hit that like button. It takes a second, but it's a massive help into me growing this channel and really reaching and affecting more and more traders on a weekly basis. All right. Thank you in advance for doing those two things, and I hope you guys enjoyed the video.
All right, traders. So this week we're going to take a look at the Aussie Canada. I'm starting on the 4-hour chart right now, and I decided to choose this pair because it kind of fits into what I wanted the theme of this video to be, where it's pattern formations and not just advanced pattern formations like Gartley's, bats, ciphers, stuff like that, but really simple and classic pattern formations as well. And what you're going to see on this chart is that we hit all of those classes. We're going to have an advanced pattern formation that we can talk about. We're going to have what I consider to be a simple pattern formation that we can discuss. We're also going to have a classic pattern formation, or at least a form of a classic pattern formation to discuss as well. And, you know, I always get the kind of the impression that many of you guys out there think I'm a pattern trader and an advanced pattern trader only. And that's because I started off that way. In fact, if you listen to the podcast I put out on Friday, it talks about how I developed as a trader and how I started with one thing because I needed structure. I needed a rules-based system that would keep myself from sabotaging my trading. But then I evolved as the years, over the years, I should say. And as I evolved, I started adding and really going backwards, starting with the advanced pattern formations and working my way back to mastering the simple and the classic and just price action. But let's take you back on the Aussie Canada for you guys that aren't with us on kind of a daily basis. You don't really know the history of what we've been looking at on this pair. So I'm going to take you back a little bit to last week where I guess this kind of series, the series initiated. So let's go take our replay deal here and let's go back to right about here. Let's erase these candles. And you can see at this point in the market, we had a lower low, lower close, right? The market was in a downward move. We had a little bit of a retracement right here. And then we clearly broke previous structure looking left, right? If I draw a line, a horizontal line at our previous structure low right here, you can see we clearly violate that level, giving us a break below, close below. This is what's considered an extension, but as far as advanced pattern trading goes, this is what's considered an impulse leg. And what it is it's really the starting point of our pattern formation. So what we're going to do is we're going to label this X, early Saturday morning. We're going to label this X, and we're going to label this down here A, and this is going to be the starting point. So for you guys that are pattern traders, this is going to be the first thing that you need to recognize. And another topic that this gets me on is people that rush into learning how to trade patterns, right? In general, we are in this society, we're chasing instant gratification, right? Everyone wants the answer. Nobody wants to do the work. Everyone wants to just kind of be thrown into the game and get a chance to play without actually practicing. And my whole philosophy as a coach, as a teacher, as a mentor, and this comes from my personal failures, is that no matter what type of trader you want to be, whether it's a pattern trader, whether it's a moving average trader, whether it's an indicator trader, it doesn't really matter. No matter what type of trader you want to be, it's important that you understand price action. And, we have a series of courses over at Tier 1, and those courses are taught in a very specific way. And for those of you that want to kind of get on the platform and just go straight to the pattern course, you're going to struggle. Why? Because you can't identify a pattern without drawing Fibonacci. So you need to know how to draw Fibonacci's, right? You can't draw Fibonacci's if you don't know where to anchor them from. So you need to learn how to identify an impulse leg or an anchor leg. You can't identify an impulse leg or an anchor leg unless you know how to read the basic ebbs and flows of price chart, right? So it all starts at the beginning. If you can't do this first step, this X to A, you're never going to be able to do the rest. Now, let me ask you guys a question since we're premiering this live. How many of you guys have attempted to trade advanced patterns or really any other type of trading strategy without really having a firm grasp of the basics of price action, right? Do me a favor, type it into the chat box on your right that's going on live right now. Type it in that chat box. Just a yes, and then also, how did that fare? Did it end well? Or did you struggle a little bit and end up going back? I know that after years of trading, trying to trade, I had to go back to the basics, and it wasn't until then that things really started making sense and that light bulb really went off. So it's important that we start with this initial move. So what we want to do is after we have this initial X to A, and I guess technically would be right here at this spike. Let's go down to a 60-minute chart. I'll make things look a little bit easier here. And we go replay. Where are we at? Right back here. Here we go. So after we have this initial X to A, and again, I'm gonna adjust this a little bit because technically this spike is the high. What we want to do is we want to anchor a Fibonacci onto that level, right? So swing high to swing low with a Fibonacci retracement tool. Now, based on what Fibonacci level is hit, that's going to allow us to know what pattern formation we're looking for. And again, this is very specific rules-based way of trading. I know there are other teachers out there, there are other books out there that say there's zones between this and this or close enough. I'm really strict. It's black or white. If it hits this, then yes. If it hits that, then no, right? And that's the easiest way for me to trade. It's been the easiest way for me to teach. Doesn't mean it's the best way to do it. Test it. That will give you the answers, but it works for me. And speaking of which, while we're on the topic, right, I got two questions about pattern trading last week. One was a good question, one was a bad question. And here's the deal, right? I am a mentor. I'm a trading coach, right? I mentor a group of traders very closely on our Tier 1 platform. But I also try my best to answer every question that you guys have on social media. Many of you guys have hit me up on Instagram. You've left YouTube comments. You've tweeted me, Facebook, whatever. And I always answer. That's just, I feel that it's right. But if you're going to ask a question, approach us the right way, right? And I got two different examples. There was a trader here on TradingView that left a comment on some post I did like 3 years ago. I haven't been on TradingView in a while, basically saying that I am trading patterns wrong. Akil, you're wrong. It doesn't work this way, blah, 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 blah. First and foremost, I don't know how you can ever tell another trader that they're wrong unless you're doing the exact same thing as that trader and you have the exact same eyes and execute the exact same portfolio. I don't know how you can ever tell another trader they're wrong. Second of all, I don't really care because I know that pattern trading has worked well for me. So when someone comes out and says, hey, Akil, you're trading it wrong, it doesn't really affect me because truth don't lie. But you're not going to get the desired answer you want when you approach someone like that. Hey, you're trading it wrong. You should change. No. However, there's another question on YouTube that said, hey, Akil, I'd like to get your opinion on pattern trading. Does it still work? Yes or no? And that's a much better way of phrasing the question. Instead of making an accusation that, hey, you're wrong, you should stop trading, it's, hey, I was wondering if it works or not. And my response was this. We'll dig into the numbers a little bit later, but pattern trading still works. I've been very profitable trading patterns this year so far, knock on wood. Last year was good as well. And really, ever since I started seriously trading well, which was 9 years ago, I would say. But they've been different. We've had I think 2014 was the year where the volatility started getting lower in the market. And I haven't really looked into it. I don't know why that is. My guess is that it was the rush of the initial Forex being the next kind of big thing. And then after that, binary options came and cryptos and maybe things started spreading out. I don't know. Could have to do something with the recession as well. But it hasn't worked the same. It hasn't worked as good since the market movement has changed. Now it's still profitable, but it was more profitable, at least in my experience, back prior to 2014, probably that era between maybe 2005 to 2014 than it has been from 2014 to 2019. Now, we all know that market conditions change, so things could go back to that. I don't have that much experience to ride out all of the ebb and flows, right? I'm still pretty new, even though I've only been doing this for 12 years, still pretty new. But yeah, it still does work for me in the way I'm trading. And if it doesn't work for you, my suggestion would be to not trade it. And if you're unsure, there's an easy way to tell if it works or not. What do you guys think? What is an easy way to tell if a specific strategy works for you or not? Backtest it. Backtest it. Right? Develop your rules, backtest it. If it works, use it. If it doesn't work, try something else. So that's my response to that. But let's kind of fast forward here and see what happens. So we're price action is rallying up, and you can see we get to our 50% retracement, and eventually, and then we start to, or excuse me, our 618. Excuse me, we're going. We get to our 618, and we start to retrace back down. Now I know that based on my rules, when price action hits a 618, and this is going to end up being our A to B leg. When price action hits a 618, I'm no longer looking for a bat pattern. I am looking for a Gartley pattern. And this is going to have to do with my D completion. So we can see that price comes, where's my little deal? I lost it. Over there. Price comes back down, gives me my C leg. I didn't write that in yet. C leg right here. And then I know that I'm looking for a D completion, which is going to be around that 786 level, just because this B completion is so shallow. So it's going to be right around this level. And we can kind of do our replay, and we see that price gets to that level. Eventually, these things take time. Patience pays off. But this is the zone that we're looking at for our pattern completion. We're looking for it to complete right in this area. And once we get above the X leg, if we get above the X leg, that would mean it's violated. Now, I personally trade them aggressively, so I put a limit order there and have at it. That's more of a freedom of time thing. I got into trading not because I want to be a slave to my computer and sit in front of my charts for a million hours a day. I got into trading because it's a job. He called it a job because it's fun, but I guess it still is a job. It's a job that I can execute kind of my own time. It's like being a business owner, right? Where the difference between someone that's self-employed and someone that's a business owner is that someone that's self-employed physically has to be there on the job, right? If you own a sandwich shop, right, and you're self-employed, you have to be at that sandwich shop from opening to close because, you're the one that's running the shop, right? You don't really have any employees, right? So you don't really gain that freedom of time. I guess you have that financial freedom, or you can earn that financial freedom because you can make as much as you're willing to work, but you're still slaving yourself for all those hours a day to get that check. And you miss out on things like family time and vacation, right? Many of you guys have probably parents that did that and they slaved and you never saw them because they were just working all day. What I like about the markets is that we can spend a few hours doing analysis, or even an hour doing analysis and setting up our trades well in advance. So as soon as we got past this B leg right here, which is February 19th, we can set our D completion because we know exactly where it's going to complete. And for someone that trades it aggressively like me, right, I have this order on days in advance. I don't actually need to be in front of my computer to be involved in this trade. I can be somewhere else. It can execute. I can come back, I can manage it and whatnot, but it allows me the freedom of time to do other things, whether it's working on business, whether it's hanging with my family, whether it's going out with friends, whatever it may be. It gives me that freedom to do that and still be involved, basically still have my business running for me. So this is the zone where we're looking for our decompletion. We can see that price action rallied up, right? Didn't turn around on a dime, right? My orders had to be right here. Didn't turn around a dime. And actually, now that I think of it, let me just check this was actually a bat pattern. I think I just missed that 618. So that's going to change things. Let me double check real quick. No, Gartley. Okay, no, I was right. Okay, Gartley just nipped the 618. I was right. Second guess myself. That's why we keep notes so we can see, right? We can look back and review. So we got to that level. Played around. Sideways, we're getting all excited because it's going our direction. Yeah, we're gonna win, everything's great. And then it starts rallying back up, and we're like, oh no, we're gonna lose, things are horrible. I should exit the trade and get scared, right? Rookie traders. And then eventually we end up Eventually we end up, right, this is the reality of a trade. You sit in this thing for like a while, and then eventually we end up rolling down and hitting multiple targets on the trade, getting a very nice winner. Now, this continued, I want to show you that because I want to give you kind of the psychology of a trade. Now, after that, we continued to rally down. I'm going to speed this up a little bit, just slightly. Rally down, boom. And you can see that we came into previous structure support, which was the A leg of our initial move right down here, right? If we look at our RSI, this is the only indicator that I use. Again, I put up a tweet the other day and on Instagram as well. If you're not following me over there, please do. I try to do some funny stuff. I'm not like a chart guy. I just post charts and boring stuff all day. I try to post funny stuff like this, the picture of the naked trader. So I am a naked trader. I know you guys on camera can see me, but trust me, there's nothing below the shirt, right? But I do use an RSI, Relative Strength Index. I use an ATR as well, which is just to kind of judge with stops and targets in some cases. But you can see price comes down to previous structure support. Our RSI goes massively oversold. I use a 7-period RSI, so it's a little bit quicker than your default. I also use more, I guess they'd be more aggressive. I use the default is a 70-30 for your overbought, oversold. I use an 80-20, so I really look for those extreme conditions of overboughtness and oversoldness. Yes, I made those words up. I don't care. But you can see price action came all the way down to about, how much did we go oversold? Golly. Let me just check my deal over here. Not that it matters, but we went oversold all the way to about 9. So well below the 20 level there. And typically in this scenario, we would look for a potential structure-based trade. This would be a counter trend trading opportunity. Price action rallies into support. You look for if support holds, then I look for a little bit of a retracement. But this is where top-down analysis comes in handy, right? We never want to just go to our trading time frame, and start trading. We want to get a view of the bigger picture. And if we zoom out to the daily, which I'll do in a little bit because it's going to mess up my replay, you'll see that this was actually a level that I didn't have interest in. And we were talking about this Friday on the chat. But let me zoom forward a little bit. You can see a beautiful retest of that pattern, of that structure level was achieved, giving us a simple pattern formation called a double bottom, right? So we have an advanced pattern formation in the Gartley right there. Then we have a simple pattern formation called a double bottom. This is a simple pattern formation that I love for counter trend trading / reversal opportunities, right? Yes, the best moves don't last. The best type of reversals are going to be your V reversals like you see right here at the A leg, where price comes down and bounces straight up. But this is a little bit more cautious. It gives you a little bit more safety. It shows you basically 2 tests and 2 holds of that level. So if you're more of a conservative trader, this is probably going to be more of your route. Now, even with this double bottom, right? Even with bearish divergence on the RSI, right? Equal lows on the price chart, higher levels or higher lows on our RSI, I still wasn't interested in this trade. And I'll tell you why, right? If we go out to the daily chart, and I make this look better, you're going to see that we have the silly little stinking wick from earlier in the year. No doubt if you've been trading, you've seen this on a handful of pairs, right? We have this silly little stinking wick from the beginning of the year. And this essentially messes up my charts, right? I don't trust stops above this level because price has shown that it can spike all the way down here to about 9280s. Before retracing back up. So any stop within that level is just not comfortable for me. Now, I'm not saying this is a bad trading opportunity. It's just not one for me. And it's important that we know ourselves as traders. We know whether we are aggressive. We know whether we are conservative. We know what type of situations we should put ourselves in. And this just isn't one for me, even with the double bottom. Now, here's where it's going to get funky, right? We go back down to that hourly time frame and look what happened next. Boom, the market shot up. So in hindsight, right, for someone that maybe missed this trade, maybe myself 10 years ago, you're like, oh, I should have took it. I should have taken this trade. It was perfect. It was a symmetrical double bottom. RSI divergence was that previous structure. And we always want to put ourselves in the the perfect situation, saying that we would have taken the best trades and we would have avoided the bad trades, right? A lot of you guys do that in back testing where you're scrolling through your charts, and when it wins, you're like, oh yeah, I would have gotten in that because of this. But when it loses, you're like, oh no, I would have avoided it because it was a Friday and blah, 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 blah. We got to be honest with ourselves, right? We are our own business. We have to be our own self-evaluators, right? So you have to be honest when you self-evaluate. You can't just paint this picture of a perfect world, because that's not what the reality of trading looks like. And I look back at this when I did my review, 10 times out of 10, you give me this situation, wouldn't have taken it. I don't care if it won, wouldn't have taken it. It's just not my type of trade. It doesn't fit within my rules. And the number one thing that I want to do is not chase profit, right? I want to follow my rules, because I know that in the long run, that's what's going to allow me to be a consistently profitable trader. Now, what this spike was caused by, we're going to get into the trade on my radar soon. I'm kind of building up to it, right? What this trade was caused by was a very negative GDP number for Canada. GDP came out at 8:30 on Friday. That was another reason I wasn't going to be involved in the trade. I knew that was going to be a big fundamental event. I didn't want to get involved during that. It could have easily went the other way. Again, we kind of ignore that when things go our way, but it could have easily went the other way. But the fact is that the Bank of Canada missed. The Bank of Canada missed. Their outlook has been off, and the numbers have been in basically directly the opposite of what their outlook has been. And at some point, they're going to have to admit failure. And if we look on kind of the economic calendar, do I have it over here? Kind of show you guys what's coming up. Because we have a lot of news coming up for the Aussie dollar and for Canada as well. But starting off on Sunday, we have building approvals right near the market open. That's always a thin period for Aussie. Monday, right? Rate statement here for the Australian dollar. Tuesday, right? We have the Governor Lowe speaking. We also have GDP coming out for the Aussie dollar. And then Wednesday, we have this bad boy, Bank of Canada rate statement. Now, it'll be interesting to see whether they admit failure, admit that they were wrong at this rate statement, or if they wait until, I think there's another one, not a rate statement. There's something important happening in April. It'll be interesting to see which one they admitted at, but could be a very busy week for this pair. Now, I would expect Canadian weakness overall. I'm not as familiar with the Australian situation as far as fundamentals go. Fundamentals are secondary by far to me. But something that you definitely want to research, something that you definitely want to look into. And for you guys that are on the platform, I will certainly do my research, and we'll talk about these more in detail during the weekly Trading Edge videos, and of course in the live room. But it's going to be a busy week for this pair, so be aware, whether that means stay out or just be cautious. But here's what I'm looking for next, right? Based on the movement we have formed another potential pattern formation. So we started with the advanced pattern formation. We came back to the simple pattern formation. Now we have kind of a classic pattern formation. It's not the best example of it. Typically, you want to see these after very heavily trended moves. They represent kind of the end of the trend. But this is going to be classified as one. So first and foremost, we rallied up off of the GDP news, right? We're putting in right now what is called a rising channel or a rising wedge. This is typically a relief pattern, meaning that it shows the loss of momentum. It's helped out a little bit because this was on a Friday anyway, but the pattern is still the pattern. It's essentially a loss of momentum pattern. What we would expect is some relief. So we would expect price action to retrace from that level. Now, if we were to retrace from that level, we would also have this. Boom, boom, little double head action there because we had the double bottom, but this right here. And who can tell me what this type of pattern formation is called? Again, it's a classic pattern formation in the market. This is called a head and shoulders pattern, right? And we would expect a bullish move from that. Now, a few ways you can handle it, right? There was a video here on YouTube I shared from one of our traders, I believe it was one of our traders in a live room, talking about what he needs to trade the shoulder. You can certainly go ahead and watch that video. If you guys are on the Tier 1 platform, you could hit Cody up about how he does that. I believe Chris Mills trades the right shoulder as well. So those are two people that have invested some time in head and shoulders pattern that trade them very aggressively if the situation is right. So I would definitely, again, find them on the chat. I know Chris is there all the time. Cody's usually there in the morning before the live room. hit them up and say, hey, do you mind explaining what you use for your head and shoulders trading? And I have no doubt they'll help you out. But you can trade it here at the shoulder, or wrong tool, or you can wait for the break of the neckline. This is the kind of the, once we know the pattern is legit, once that neckline is broken, you can wait for the break of the neckline and either trade the breakout or see if you get kind of a classic pullback trade where we break it, we retest it, and then we rally up. But looking for buying opportunities on this pair. And I suppose you can look for a selling opportunity on the open, trading this rising channel in the structure. If it forms the right way, that would actually be a good counter trend trade. But the bigger picture trade that I'm looking for here is going to be that head and shoulders, and in anticipation that we're going to see a rally up past that neckline. So certainly something you want to keep your eyes on as the week goes on. Now, as promised, we're going to spend a little bit more time. I know I'm running long already. Spend a little bit more time just kind of updating you on how my trading has gone. We've ended the month of February, and I like keeping you guys updated. That way you guys see the ups and downs of trading. Those who are on the platform, they see it every day. They see the win streaks, they see the lose streaks, they see the happy times, they see the sad times, and it's cool because it gives them a reality of what to expect. That way, when they go through it, they don't really have those emotional yo-yos. I know for you guys on YouTube, I don't see you guys that much, so I try to keep you updated as much as I can. So give me a second, I'll load up a spreadsheet and we'll kind of talk about how February went. So overall, it was another positive month. Again, anything in the plus is better than anything in the negative. But a pretty normal month. Took about 17 trades, had 11 wins, so that's about 64%. So again, still batting above my average. I'm typically a 55% trader. Typically my ceiling is about 60. So I'm still expecting a drawdown and to kind of revert to the mean. But I'll keep riding it out as much as I can. Maybe it won't happen. Who knows? My job is simple. I come in and I trade the plan. But pretty good activity. 17 opportunities. Again, about 64%, 520 pips. But here's something I want to do with you guys. I did this with our traders in live room. I want you guys to tell me, what do you notice here? I'm gonna run off some of all of the results and let me know what you notice. Right, plus 166, minus 36, minus 52, plus 240, plus 50, minus 80, plus 20, plus 26, plus 19, minus 68, plus 22. Plus 130, plus 119, plus 40, minus 40, plus 7, plus 28, and minus 32. Does anything stand out? And for you guys that were in the live room, and you know this already, so don't spoil it, but does anything stand out about these numbers? Talking to the YouTubers now. What stands out about these numbers? Well, what should stand out is that there were no really big extreme losses. And that's the message that I've been preaching this entire time, is that trading, professional trading, consistently profitable trading is about risk management, right? We're going to take losses. I tell you guys that all the time. I lose about half the trades I take. The key is we don't make those losses big. We don't allow those losses to hurt us. And we take advantage of our wins. So there's not a lot of big wins in here, but you can see there's a 166, there's a 240, there's a 130 and a 119. So about 4 out of the 11 trades, winning trades, were big wins, which is, a good percentage. But how many big losses were there, right? There's the negative 80. I would say that's one, that's on the higher side. You can even say the negative 68 is on the higher side. And of course, that's both positions added together. But aside from that, most of the losses are pretty small, 36, 52, right? 40, 32. And that's the key. That's the key. Just like a trending market, right? You keep your retracements small, you keep your extensions longer. As long as your extensions are longer than your retracements, you are in an uptrend. And the same thing with your trading. As long as your losses, unless you're hitting at a really high win percentage, but unless your losses are smaller, or as long as your losses are smaller than your wins, you'll consistently see that equity curve bounce to the top level, or bounce from the bottom left to the top right. So that's the most important thing that I can keep preaching to you guys. And we always talk about that. I care about not win percentage. I don't really care about pip total. I care about average pip, average loss expectancy. Those are the main stats that stand out to me. Now, just to kind of address before we leave the deal about pattern trading, if we go into our kind of our tune-up right here. By the way, it's about, what am I total? 8%. So it's been 2 months, not even really a month and a half, but 8% total. You guys know my goal is to be 3% a month. If I'm doing 3% a month, I know I'm on track. That's before money management. So 8% total return over 2 months. I know for many of you guys out there, like 8% return, I do that every day. Well, the reality is that most consistently profitable traders don't. Most consistently profitable traders, if you ask any professional trader out there, it's a very slow, steady incline. If you can do, it's generally thought, again, if you can do 2% a month, average 2% a month, you're considered a good trader. If you can average 5% a month, you're considered a great trader. Now, of course, money management, and maybe we'll do that towards the end of the year, show you kind of what money management could do to those numbers. Sure, you can increase that massively by implementing a very strong position sizing and money management system. But as far as just basic straight trading goes, most of the people that you hear about getting 10% a day, they do that for a week and then they blow their account because they're trading with a massively big position size and they're taking big losses. And when those big losses eventually come, they blow all their earnings and they end up blowing their account. That's why you see them on the internet for very short periods of time and then they're gone, right? So, real quick, I laugh because it's funny and it's true, and it's our goal is to kind of shift that mindset, take you guys that are watching that video that once believed that, you guys that are thinking right now, I'm gonna leave a comment saying how this is rubbish, talking about 2% a month is good, horrible. My job is to show you that that's actually the truth, and I challenge you to ask, again, not every trader, everyone's different. There are some really good super traders out there, but I challenge you to ask the majority of professional traders out there what they're doing as far as proper risk management, and I think you'll be surprised with the answers. And maybe it's not that 2% number, but it's definitely not your 10% a day. I mean, just do the math on that. If you can average 10% a day, right? Think about how many billions you would be worth. Just be realistic. 10% a day. 20 trading days a month. 12 months in a year. Just be realistic about that. But let's go to one more thing. Again, let's talk about the pattern trading deal. If I'm going to go to my tune-up right here, and let's just go, what am I doing? Trading system. And let's just look at the advanced pattern. So let's not select all. Let's go BATS, Cypher, misspelled Cypher. I got to fix that. And Gartley, right? Those are 3 patterns I trade. And you can see how they're doing so far this year. And this is what I like about kind of this money management spreadsheet is you can go in, we can tune up. I can actually look at individual stats from individual strategies or individual time frames, or basically, if you look at the right here, any of these fields on the right, I can kind of take them into account and really dig into the numbers and with precision, which is pretty cool. So especially for someone like me who is like, I'm technology and me just have a bad relationship, right? I'm that guy that hit, what was it, Alt F4 when someone challenged me to and I blew up my computer. That's me. But you can see, pattern formations has been good this year. They've been profitable. They've actually been more profitable for me this year than my other trading styles. The bat pattern hasn't. That's negative, but you can see Cypher and Gartley more than make up for that, and so that's fine. So pattern trading isn't dead. Again, it's not my only thing, but it still does work. And again, I just challenge you to just do the work on it first before placing judgment, because it could be something where you're just not trading them the right way. And again, I'm not here to preach and tell you to trade patterns. I can care less about how you trade. Trade a way that fits your personality. But, don't overjudge any system until you actually test it. But make sure you do the work before testing it. If you can't identify trend continuation, if you can't identify structure, right, you're probably going to fail when you do your back testing on structure trading because you're just not good at it. If you can't identify advanced pattern formations, which goes back, like I said earlier, to drawing fibs and identifying impulse legs, you're probably thinking you're identifying patterns, but they're invalid patterns, and now your results are based on invalid patterns, so you have this negative taste in your mouth, but it's only because you were doing things the wrong way. So as always, I appreciate you guys joining me for the video. It is a massive help if you do 3 things. 1, if you're new, hit that subscribe button. Make sure you hit the notification tab. That way you're notified whenever I put out a video. That way you can join us live for the premiere videos as well. It's pretty cool. Secondly, hit that like button and hit that share button. Those are very important as well. Show me you liked the video. I only know if you hit the like button. If you don't, I will assume you don't. But also share this. Share this on social media. Help grow this trading community. And help really positively affect the other traders out there. Again, we're trying to change the mindset. That's the goal. Change the mindset from this get rich quick stuff and hopefully stop traders from getting scammed. If you guys heard the podcast I did the other week, we talked about a trader that spent $10,000 on courses, but didn't really know how to trade. And I wouldn't call that a scam. Again, I know the company he trained with, or I'm pretty sure I know the company, and it's not scammy, but the fact is they didn't teach him the full story. Either that or he just didn't commit to it. So it's important that you do things the right way. I believe in mentorship, guys. Mentorship by far, whether it's trading and any type of business, is the fastest way to become successful. Doesn't mean that you can't be successful in other ways. You can certainly be self-taught, but it's proven the fastest way to become successful is to find someone that has done it or is doing it, latch on to them, and learn. And the reason it's quicker isn't just because they have knowledge, right? You can learn stuff from training courses. You can learn stuff from books, from other people that have knowledge and have written about it or have made videos, and you can watch them. But there's a big difference between knowledge and practical application, and that's where a mentor comes in handy. Yes, you know knowledge, but if you can't practically apply it, and this was the trader's issue in the podcast I told you about, if you can't practically apply it, it's pointless. So the cool thing about having a mentor is they have those experiences and they can kind of give you a heads up about what you're going to struggle on. Hey, watch out for this. Hey, make sure you don't do that. Hey, when this happens, here's how you handle it. They can teach you from their experiences, and that's experience is so much better than just kind of the knowledge, the text, the whatever it is that you're learning from. So that's kind of the biggest thing we're known for over at Tier 1 Trading is that mentorship. That's the reason we were recognized by Forbes magazine, because of that innovation of trading, not just taking a trader and saying, hey, here's this, here's that, go with it, but it's actually bringing a trader in. Hey, take my hand, come in with me, let's come learn, let's walk you through the process. And not only Jason Grayson and myself walking you through the process, but the community of traders, both experienced and new, all going through that process together. And it's been amazing. The results have been fantastic. And it's really solidified my view on how to teach, on as a trader, how to learn and how to coach. So if you're interested in that type of stuff, head over to our website. I'll put a little link below, but there's a 14-day trial membership. You can get on the platform for 14 days. You can check out all the cool stuff we have to offer, the Emergence training course, 2 live rooms, accountability session, trading edge videos, community chat, software, blah, 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 all that fun stuff. And it's risk-free. So after your 14 days, you don't get auto rebuild. There's no sneaky charges like that. You simply get cut off unless you decide that you want to come on for a premium membership, which is what most people do. So get on the platform. If you do, introduce yourself to me on the chat. That way I know you're here. I can say hi, makes you a little bit more comfortable around our other traders, and start working on becoming a better trader. Until next time, plan your trade, trade your plan. I'm excited about Everton playing Liverpool tomorrow. But maybe they'll surprise me. All right, take care. You guys have a great weekend.